Tesla institutional analyst Gene Munster of Deepwater was interviewed on CNBC, and he breaks down all the key reactions so far. We'll also share reactions from Piper Sandler and Jim Cramer, the always contraindicator. Tesla's earnings had some great news, but the stock dove afterwards, mostly on the miss on auto gross margins. Let's review the details. I've got Brian White joining us. Brian is the host of his YouTube channel, FutureAza. He's on the road right now. Appreciate you joining me, Brian.
I love that Jim Cramer, the contraindicator of all contraindicators, made it into your intro because it's true. Doctor Strange saw 16 million universes and not one of them was Jim Cramer right.
Yeah, that's right. This is Jim Cramer right after the earnings call. He posted this, says, I know that Tesla stock is down after hours, but holy cow, what a terrific conference call. Tutorial autonomy, humanoids, batteries, really impressive. He apparently has been tweeting many more very positive Tesla comments. And of course, the stock dove big time the next day. So it's terrible. So,
but it's consistent. So there is, I've heard that there is an ETF that is the opposite of Cramer Fund, and it does okay.
I think exactly right. All right, so let's watch. What is it? Gene Munster. Gene was on CNBC right after the call too. So Gene Munster is an institutional analyst at Deepwater, and he breaks down the key headlines so far, including an update on the robotaxi reveal this fall.
The stock has continued to slip in the after hours as soon as Elon kind of wrapped up his first 10 minutes of comments. And I think investors were hoping for him to say something more optimistic. You mentioned a couple things there, but that doesn't really change the trajectory. That still the substance of the excitement of the story is probably a year plus away. And so I think all of those are good around just check the boxes, but those boxes don't start getting checked for some time. And I think that's probably why we continue to see a little bit of slippage in the stock.
Why do you think all of a sudden investors really care about a timeline, Gene? I mean, I feel like, we've been thinking about robotaxi a year out, and all of a sudden a year out now is problematic.
Well, it's problematic in the context of what we saw with margins. And since those margins dipped, they did generate more cash. Cash inched up to $31 billion. So they got plenty of cash. But once you start to stress the margins a little bit, it causes investors to want to see more in terms of when this next thing is going to start to hit. And so I think that's kind of elevated some of the anxiety around timing. I'm still in the camp that they're going to deliver on these. They won't deliver it on time, but ultimately no other car company is doing what Tesla's doing. And I think this is still going to move higher.
Hey, Gene, if the bet that Elon made on price elasticity has been very wrong for 18 months, why would you start making new cars? Because I have to assume that that ramp is only putting more pressure on margins.
Well, two things. They're going to be reorienting their manufacturing process. They talked about this last quarter, so that these new car models, probably two of the three, I think there'll be three, will be essentially a tweak. So I don't think that there's going to be a step down. They said that they'll be able to build cars more efficiently. And so the price elasticity piece, just a quick a note on that, is over the past few quarters, the ASPs have gone from about 46,000 to 43,000. They have gone down, but it hasn't been a dramatic drop. And of course, one of these new products is going to be probably around $25,000. And so I think that the true test of price elasticity hasn't hit.
Gene, so basically you're holding on to the stock for what's going to happen maybe 2 years down the line. I'm just wondering how you think about that in terms of holding on to something that could very well be sort of dead money when you see so many other opportunities. You think of AI as sort of a once-in-a-generation opportunity. I mean, there are other places to put that money.
Indeed, there are other places, but there is no company like Tesla that ultimately is trying to solve these complex problems. I know that other car companies are teasing around the edges, but this company is all in. Call it whatever the market cap is, sub $1 trillion today. You think about the opportunity, what they're doing around automation, around FSD, fleets, even what could potentially come out from Optimus. I'm not hanging my hand on Optimus, but Melissa, I think when you think about that, that opportunity sets in front of them, and you think about that there are other companies that are $3 trillion market caps, I think Tesla can be in that league. I know today is not the day to be thinking about this with these ugly margins, but I think that the company is firmly on track with where the world is going, and I think that that's the reason to, in my opinion, that's why I'm holding my shares.
Okay. What did you think, Brian?
Yeah. So Gene is very smart, and he is absolutely correct. The question, I did not agree with the premise of the question he was given. Well, Elon's been wrong about price elasticity for the last 18 months. No, he hasn't. The sales have increased over many of those quarters. But the bigger thing is saying, well, because price elasticity doesn't work, then why would he introduce more affordable cars? For that reason, for exactly that reason. That is exactly why he would do it. And I don't know about a third vehicle, but I do know about the proposed two intermediates, the Y intermediate and the 3 intermediate. And it may only be one of those 2 or 3 models, but that would be enough to enter a new segment of the market. And if you're looking at a car that unsubsidized would be cheaper at the retail price than a lot of the gas competition, to say nothing of how cheap it is to own over time, assuming you have access to home charging, these are the winners. That's all you need.
So obviously the stock fell, and that's because people have a short-term view of what's going to happen. People don't think that there's going to be any more catalysts in the next 3 months. But Gene Munster did a good job explaining his perspective of why he thinks that it's going to go well. Some analysts raised their price target. Look at this from Piper Sandler. They raised it from $205 to $300. What a huge jump. This is Alexander Potter. But of course, the stock fell. And the reason they said, so let me explain kind of like the summary of what happened, how people saw the Q2 earnings call. It was a beat on the revenue, but it was a miss on earnings per share. So earnings per share was a critical thing. The earnings was the revenue was 25.5 billion, beating expectations 24.7. But earnings per share 52 cents against an expected 62 cents. Reported lower than expected earnings per share 42 cents on a GAAP basis, and so the stock fell. Now, what I've heard, and of course there's a lot of analysis going on here, but if the earnings per share did not include the one-time charges for the layoffs of the restructuring of the company, it would have actually beaten 62 cents. And that was one of the key things that people didn't do that. And it's surprisingly that many of the big whales did not think that. They just said, hey, I'm going to dump the stock because nothing's going to happen in the next 3 months. Thoughts on that?
A lot of these analysts seem very smart on paper until you actually read the paper, and then you realize you missed something that was right in your face the whole time. I enjoyed the live stream we did yesterday with Larry and Jeff and others. Larry is so smart that you have to wonder, if Larry can do this in his spare time, how is it that the Wall Street guys are so abysmally bad when they often have teams of analysts to try and figure out what's going on, and they can't even see what's going on right in front of them? So I think the restructuring cost did come in double what was expected. I don't understand all the things that go into that. I've never worked in that area of business, so I don't I'll give myself a pass on not understanding how it works. But that is an absolutely one-time element. And the company is still strong, growing, moving in the right direction. No big obvious misses from that restructuring. So I think it's going to be, I think it's good news. And I'm surprised that the stock price reacted in the way it did.
Yeah. Let's, one of the people that I thought did a great job summarizing what happened at the call yesterday was Stephen Mark Ryan. And he said, short-term people, they call it disappointing. But if you're long-term investors, you got pretty excited. And I was very excited yesterday because here, some of the key points. Multiple OEMs have discussed FSC licensing, okay? And it wasn't just last call, he was saying there's a discussion with a large OEM, but now it's multiple. And he even said it had to be in the millions, not 10,000. EVs had to be in millions. And so now we're talking BYD, we're talking about other European companies. We'll see what happens there. XAI investment is possible. Okay. That's kind of still not, I wouldn't put that up on top of there. A few new products to be shown on 1010, right? So I didn't hear new products. I just had a couple things extra to show. Didn't hear a few products, but it was 1010. That's the critical thing for me, that it's not 8. It's 8.8 to 1010. It's not a big deal. If it was January, as Larry was saying, that would have been a huge, concern. New vehicle ramp next year, right? That's the other thing that we heard them say. And Jeff Lutz has been pointing out that if you hear what they said about a 50% growth from 2023 numbers, that's what they said, 50% growth. That means they're building something. They're going to sell something. Optimus on track for thousands working end of next year. The 4680 cells, they said that the dry cell battery has been solved, 50% quarter of quarter. It's in a Cybertruck now in Q4. Cybertruck's going to be profitable soon. This is one of the drags on earnings per share. Jeff Lutz has been saying that Cybertruck is losing money still. It's not profitable. And as they ramp up and scale, paradoxically, it's causing an issue in the earnings per share this quarter. But once they get higher scale, once they figure out how to lower the costs, they'll get that. That's one of the big contributors to why the margins are lower. So it's all explainable of what happened. He said we're going to double down on Dojo. So this is the first time you're hearing Tesla talking about AI. Previously, whenever he's talked about Dojo, he's always downplayed it, right? Oh, we don't know if it's going to work. We're still not sure yet. Maybe. But now he said, look, NVIDIA is causing us to double down on Dojo. FSC price cut saw the big boost. COGS fell when accounting for Cybertruck. Yeah, there you go. I just said that. Rebound on EV orders, right? That's another thing that they said. We're seeing stabilization and rebound in Q2, both China and the rest of the world. Energy demands quasi-infinite. He talked about that. Record revenue, record energy profits, continue to invest big in AI. FSC 12.5, 5 times the parameters, and merging city and highway. What's your thoughts on, what was your reaction to the earnings call?
Meh. No, I'm just kidding. Well, so for me, I am also in the long-term camp. So this wasn't exciting to me. This is what I wanted to see. This was the opposite of disappointment. I saw the numbers and I said, these are good. Considering it's a difficult environment, considering the macro is tough, considering a lot of car companies are losing ground, some are even losing money, to have still good numbers, to have good profit, to have some massive one-time costs and still show a profit is fantastic. And we talked yesterday on the live stream about the regulatory credits. We were told a decade ago that you've got a couple more quarters of those and then they're gone forever. Better get things sorted out because those are not going to stick around. And we saw a new record high because so many of these companies just keep stepping back from their EV ambitions when the laws have not changed. You still have these fleet benchmarks you need to hit. Guys, you are building Tesla's factories. We're up to something like 9 billion. That's pretty close to the price tag for all of Tesla's automobile factories combined. Wow. Free factory. Come get your free factory. And what we're making is your lunch, which we're going to eat. So...
Love you, Ryan. This is why you're the best. If you're not watching his shows on FutureAza, his YouTube channel, you're missing out, man. This is so good. You're very funny and you're very smart. You know a lot. That's why I wanted to get you to opinions specifically about the vehicle production and the manufacturing. Energy. I want to show this because, this is, we saw, of course, the jump in energy, 9.4 gigawatt hours, total storage deployment. But a couple of big things that they have said is the energy business achieved record revenues and gross profit, record gross profits and record revenues. The Lathrop Megafactory continues to ramp successfully, achieving a production record in Q2. So it's ramped. And the Shanghai Megafactory remains on track for the start of production in Q1. So this is all very good news. This has been announced by Grace Tao. Even Tom Ju said a while back that this is still on track. And so things are going to get even better.
It's exciting. When you build a car, building a car is very difficult, but selling it is very easy. When you build a megapack, building the megapack for someone like Tesla is very easy, but getting it out the door and in place and permitted and that's where all the complication lies, is in actually selling it. And it looks like that's a part that they've got sorted out. They've got the right people in the right places so that of course they can manufacture these all day very quickly, very easily for someone like them. But now they've also got the other part, which is let's get them actually deployed, and it's working. So now let's double it. Let's double it in Shanghai and then see where we go from there. And as more manufacturers get more battery capacity online, good news. I think we can take those too. We'd be happy to take them off your hands.
Yeah, and Elon said, right, he spent a bit of time on the earnings call saying that, God, the market for energy is it can even be double or triple what the power consumption is today. And then he explained that every single power utility company will need this, and they have this. It'll have so much benefit. So it seems to me that they've already proven that there's an ROI. You're seeing increased sales. I think they also mentioned that their backlog is just crazy. And so
Yes.
now that they're ramping up these two factories and Shanghai is on schedule, we will hear another Megapack factory announced before the end of this year, is what I'm going to say.
I would say within a year, but I would not be surprised if it's by the end of the year. And also, I wouldn't be surprised if it's not just announced, but already underway when it is announced, like we saw with Lathrop, where they said, "Oh, by the way, this most of a building is part of it," and that was an old J.C. Penney warehouse or distribution facility, I think. And yeah, it just makes sense. Today, they're still kind of expensive, so they don't work for everyone. But they work for so many use cases at the price they're offered today that it allows expansion. And just like anything in tech, they will come down in price over time. And as they do, it'll be capable to be implemented in more and more places for more use cases. And the market just keeps expanding.
Okay. And then what's the last thing I want to show here is, the vehicle capacity, right? So they said here, let me make this bigger so we can all see it a little bit better. We continue to add to our vehicle lineup globally, introducing new Model 3, Model Y trims, additional paint options. After a sequential decline in production Q2, we expect a sequential increase in production in Q3. Okay? We're now back to growing. So this is their, how do I do this? There we go. Boom. So if you look at this table down below here, this is the market share of Tesla vehicles by region, and you can see how it's growing. And then people go, "Oh my God, Tesla's competition's come," and there was a dip, and it's flat. That's where they're saying that's where the competition. But if it's a couple quarters, and yet if you look at what they're actually doing with installed capacity, they're growing it by 50%. So I'm trying to find that statement. Did you see that part?
Well, yeah,
about the 50%?
well, yes. He just said that it will add 1 million in capacity next year. And that's 50%. So this is, and if you look, I love these because when we saw the capacity factor for China, it's always been understated. They were saying, 450,000, I think, while they were producing 700. And then they were saying, maybe 900,000 when they were producing, I think the last number was 750 when they were producing over 1 million. And it was just, and this has Cybertruck capacity, 125,000. And I have exceptional confidence that that is not the real number. The real number is at least double that.
Yeah, here it is. You can see here that the product plans for new vehicles, let me make this bigger, including more affordable models, remain on track for start of production first half of 2025. Isn't that great? It's still on track, first half. These vehicles will utilize aspects of that. Okay, so this is the part that I was trying to understand here. This approach will result in achieving less, because it's not the non-unboxed model. It's going to be less cost reduction than previously expected, but enables us to grow our vehicle volumes in a more CapEx efficient manner during uncertain times. This should help us fully utilize our current expected maximum capacity of close to 3 million vehicles. So they've got existing factories, existing production lines. They can get to maximum capacity. That enables more than 50% growth over 2023 production before investing in new manufacturing lines. So this is, I had a debate with Jeff Lutz, and Jeff was saying when he read this paragraph, he thinks that it means that 50% growth is going to happen in 2025.
I mean, if it won't, because the vehicle won't be out until sometime in the middle of 2025, but a run rate by the end of 2025 could be 50% higher than the run rate at the end of 2024.
Yeah, I think that's what he's saying. But yeah, but we're back to 50% growth just on these more affordable models. We're talking next year. So
Possible. Anything's possible. We've got a lot of bridges to cross before we start getting to that. But I think the roadmap is clear, and I think it is exciting.
lots of good things there. But any comments about the factories? This is something you follow closely. We talked about Megapack
Yes.
factories on track. We talked
Yes.
about here how they're going to get each of the factories to maximum capacity, close to 3 million vehicles. Any other thoughts
Yes.
on that?
So I said this in the live stream yesterday, but I don't expect everyone to sit through all of those hours to get to these. The important thing to remember about these factories is when Tesla makes something that they already know how to make, it doesn't take them years. It doesn't take them 5 years. It doesn't take them 2 years. And the example I would give is that when they started making the Model 3 in Shanghai, it was slightly different than the one in Fremont, but it still took 1 year. When they wanted to make the Model Y in Fremont, they'd never made a Model Y before, but it was basically a Model 3. They got it done in a year. When they wanted to make the Model Y in Shanghai, 1 year. So when they, and the same with Berlin and Texas, they don't have to reinvent the wheel. So if they're going to make an intermediate compact that's based on the 3 or Y, it's not a whole new thing. It's a slightly new thing. They can get it done, not in 2 years or 5 years, but a year. And that's where we're hoping to be a year from now.
Thank you. I appreciate your knowledge and your experience. You want to hear more about that? Check him out on FutureAza. He's got very detailed. Few people know as much as he does about the factories and the vehicles, as you can see here. And he actually lived in China too, so you can check out more information about that. Thank you so much, Brian. See you soon, guys. Bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.